so we can get a Q&A at the end.
Thank you very much, Kefa, and the entire team from NMG, and especially Business Daily, and all Kenyans and investors and various stakeholders in the investment realm. Good afternoon. Kenya oye. Kenya oye. Thank you very much. My name is Ndindi Nyoro, MP for Kiharu constituency. And I say that because I want to take half a minute as your employee, as the Kenyan people, to tell you that beyond investing, because that's the main agenda of the day, I am very proud to be a representative of Kenyans. I'm actually just from appearing before a committee of parliament in terms of processing my proposals to see how we can intervene as parliament to lower the fuel prices. Secondly, as a member of parliament, you know we oversight NGCDF, and I want to report to you as my bosses that in Kiharu, it's a rural constituency, actually one of the largest, and all our public primary schools, all classes in all public primary schools in a rural constituency, they are actually all tiled. You know, based on the kind of question I had from Madam Denya, she's asking, what's the big deal about tiles in a school? Because maybe she was in the Nairobi Academy. It's a very big deal in a rural constituency, and I'm very proud about that. And of course, beyond improvement of other infrastructures. The second thing is that we run a program we call Kiharu Masomo Bora, where all our 65-day secondary schools, covering over 12,000 learners, we have been able to work on a model where school fees is only 500 shillings per term. And learners eat in school from Monday to Saturday. And the last Friday of the month, including today, they actually take chapati over lunch. And that is beyond doing what we also need to do in terms of making sure we have laboratories, we have revision materials, and all the others. Now, I want to be very quick and fast so that I don't give you my stories. I also take time to answer your specifics, because I may take for an hour, but I'm addressing one table. But Q&A helps you to diversify your speech in terms of what the people are looking to gain from your presentation. I'm happy to see my friends here, many of you, Minette team led by Mainga, and all of you. In fact, I've been looking at all these banners here as a person who really loves investing. Really. I mean, when I am stressed, I read Forbes magazine. And when I'm stressed more, I read Fortune. And seeing all the companies represented here, it's my hope that I can be able to buy a stake in each of them. From Sanlam, I joined Patrice Motsepe there, to SIB, to ABSA, Abojani, and all of these companies, including our host. It's lovely to see companies, corporates, displaying in this kind of display. I know the reason you called me Mercy. I know it's because of Kenya Power. And number two, because of KQ, because you covered it in your Business Daily. And I just want to highlight, because listening here, and I'm very glad that I got some presentations going on, is that you have had time for many people to talk about many things. So I'll not come here to talk about investing in terms of a fund or globally. Globally meaning as an investment company. I try to individualize investments because there are more qualified people to talk about the other alternatives. So in my brief speech, if I say anything against your company, I don't mean it's bad or what you do. It means that we came to share diverse ideas. That you shared your idea, I share mine, because we are looking for different audiences and different house, as the SLA put it. So what do we do when we are investing? What do we look for? Obvious. From the village, as Kamau put it, your father does not believe you made it before you have land and before you have a file of titles. So when you go home over Christmas with a file of title deeds, then your father knows he has a son. If you go with things called shares and crypto, he has a son, yes, but there is room for improvement. So there is land and everything associated with land. And what I'm giving is my reasoning, so it may be different from many others. The second thing we look at is anything fixed income. And I highlight two to represent all the others. Fixing money in the bank, like the one we presented here, or the obvious, T-bills and bonds, government instruments. Because I am assured of my return, it's fixed. Somebody is dealing with the risks. Me, we wrote an agreement. What we wrote about, I'm assured. The third thing is my pet, investing in companies. I'll highlight three to represent all the others, because all the others is an accumulation of those. If you put up a fund that purchases equities, so I don't want to go to that. I want to highlight the specifics. So the third one is the equities. Equities is shares and buying companies. And as you know, I'm a proponent of that more than the other two. More than the other two because investments is about timing. When am I investing? Myself, I may not be a proponent of land, but I've made money in land in the past. I have made multiples in 2 years by just buying a piece of land. So I could be the last person to talk anything bad about land and real estate. But that is then. It is a decade ago, just when I left KU for my undergrad. Around that time, land was hot, and it was actually hot. We made money. Is that the case now? You tell me, because you have land. Try to sell it, and then we compare notes. And don't tell me about the value of your land. Tell me about the offers, credible ones. Because there's a whole difference between what you think your land is worth and what you can actually receive from a person who can actually buy it, not the one who thinks they can buy it. The second thing, both and fixing money is both sides of the same coin. Because both are lendings. Both are debts. Lending, fixing money in the bank, you are lending money to that bank. They actually compare it. Your deposits, they take it as a liability, not as an asset. Because you have umekopesha, benki pesa. The other one of T-bills and bonds, you have given your money to government for a predetermined rate. So you are lending money to government. So both are the same. It is lending. And you only lend money when the other person has better use for it. It means when you are lending money to the bank through fixing it, and you are lending money to the bank through buying T-bills and bonds, you have admitted that those two institutions have better use for your money than yourself. So, that is the case. The third one is buying companies. But before I go there, because I'll be pretty short as I said, this issue of lending money to these two institutions, fixing and also buy T-bills and bonds, there is one fallacy that I want to dissuade us from. Fallacy of government never defaults. government will only always pay me my money because it's government. Yes. Because possibly in your investment lifetime, it has never happened. But remember, all the things that take too long to happen, when they happen, they actually happen. So, I'm here as a Kenyan in a country where we have 13 trillion in debt, national debt. Because those T-bills are what I'm talking about. Don't think I'm deviating from the speech. You might think, oh, he has now started those economics. No, I'm still on your boats and T-bills. Because the accumulation of those are the ones we call national debt. So it is 13 trillion. 60% of that is your money. That is domestic borrowing. And they happen majorly in those two elements. 80% of that 60% is domestic debt. 80% of our domestic debt is owed to financial institutions. 80%. Households, who are me and you, is, I think, around 3% or thereabout. NGOs around 1%. So we go back to the default setting. That's what I want us to analyze together because that's what we are doing here. So we are at 13 trillion because for the last 4 years we have borrowed more than 4 trillion. That's the reason why we are there. It's because for the last time from 2022, we have actually borrowed close to 4.5 trillion. So 2022, debt is 600 billion. 10 years Kibaki goes, debt becomes 1.7, 1.8 trillion. So he borrows 1.2 trillion in net terms. But the revenue grows by 5 times, from 200 billion to 1 trillion. There's a reason I'm saying that. Then from 2013, our debt grows from 1.7, 1.8 trillion to 8.7 trillion. So in 10 years, we borrow 7 trillion. Our revenues in the same period grows from 1 trillion to 2. So the debt triples, more than triples, but the revenue doubles. So you can tell now, in that pace, who is actually a Kenyan Maradona and others. In that Boston Marathon, you can tell who is a Kenyan. The Kenyan there is the debt. A normal Maradona is the revenue. So the Kenya is way ahead. The other Maradonas are way behind in terms of the growth. So we are in 2022. Marathon is continuing. Debt grows from 8.7 trillion. We are now even not yet done with the first half, with 5 years. With 5 years. We are not done with 5 years. The debt is now 13 trillion. So, we are in a race to borrow in 10 years. We are in a race to borrow in 5 years what we borrowed in 5 years, the previous government. What we borrowed in 10 years in the previous government. And now we are borrowing in a year what Kibaki borrowed in 10 years. Now, so, underline here, because that is we are still in boards. In your boards. We are still in your investments. So, the debt has grown from 8.7 to 13. Interest rates alone, domestic. So, out of 100, we will be spending, if you include principal, 90 shillings out of 100 to service debt. So, to wrap up that story, so that I finish up with shares, that story is about Kenya, but you as an investor, you need to very fast find a friend from Ghana. Get a friend from Ghana and have a call after this session. And then recap the story I've given. It is definite. It's so definite. If we do not change course, what we think is a solid rock, will soon disintegrate. Because how is that going to survive? How? So I am foreseeing in the future, not very long future, a boardroom like this. The person who will be standing here is government, not Ndindi Nyoro. Government. Have government as a person. The government will come and pick the microphone, and you'll be seated where you are sitting. The bank CEOs mostly will be in that table. Micah and your team will be here, because you must be in the front row to get the message correctly. Insurance companies will be there where there is microphones. And all of us as Kenyans will also be listening. Maybe the hall will be too small for all of us. Others will be out just listening. Hii mkutano ni ya nini? Then the program will start running like today. Let's have some brief remarks from the CEO of the group NMG. And after that, the main speaker, who is the government. The government will take the mic and tell you, good evening. It will be an evening that time, most likely. Because mornings are not made for those kind of news. Then they will come and tell you, I know and I agree. You are a good Kenyan. You gave me 1 million shillings last month because you bought treasury boards. And I'm very grateful because we were able to pay some recurrent expenditure which were really pressing us. And then the government will go ahead and tell you, you know, Kenya is for all of us. We all belong here. We are Kenyan and you are patriotic. And I want to commend you for your patriotism. And it's because of that patriotism, I come to request you, our debt is 13 trillion and 60% I owe it to you. But out of the interest rate I'm paying of 1.25, only 0.25 I am paying to external. Because external debt is always cheaper. That's why you see 40% of our debt is only accruing to 50 billion of interest. But 60% of our debt is accruing a trillion in interest. So the government will now tell you, because wale wengine, sinajua ni external people. Now hawatusikizi, they are hard. They are radicals. They are not listening to us. So let's leave them. We pay them their 250 billion every year. And that's the reason I called you as Kenyans. Let's see what we can do about this 1 trillion. Because there are some roads going to your home, and there is a school we went to for primary school. There is something we are doing about those two things. That's why we are requesting. We know for sure we owe you 1 million shillings. But because I'm the sovereign, on this Tuesday evening, we have just decided from our meeting as the government that out of this 1 million, we owe you 700,000. Then you start tapping your neighbor. Did you hear? Then the government will tell you, yes, I am very happy for your patriotism. Out of 1 million shillings, from today I owe you 700,000. In barbershop and salon language, we call that a haircut. And then they tell you, we know we also owe you to pay you next 6 months some money. We are requesting for the next 2 years, you may not hear from us. But immediately after 2 years, you start hearing from us. So you remember the board you bought for 10 years? We have just made it 12 years. Only that for these 2 years in front of us here, don't wait to hear from us. Thank you for your attention to this matter. See you another day. Signed, the government. I know that sounds like a story. So after this, call your Ghanaian friend. And then make sure you call a pensioner who is also a Ghanaian. The ripple effect is that this money from financial institutions are deposits, which I have also lent to the bank as a deposit. I am not trying to paint a picture, but I would want all the experts here after we finish. Anyone with an answer to that, come and pick the mic. Tell me the alternative to that in the next in the next few years to come. Tell me. So we either change course as a country, or these boats we are holding, they are not worth what we are holding. Because the other alternative is to print money. Then print money. It is the same scenario. It lowers the quality of your money. So let me go now to the optimistic side. Shares, boats. I almost made a very gross mistake. Shares and equities, whatever name you may pick from it. So why do I prefer this, me as an investor, other than all the others I've given? Again, because of time. Around this time in Kenya, I think I'm well positioned. Shares, of course, you start by looking global. When you look global, Dow Jones is over 50,000 now. Within Iran, not outside of Iran, within the Iran issue, Dow Jones are now over 50,000, the index. Almost touching the record high, which it touched earlier this year. If you look at all the other indices in the US, some by yesterday touched the all-time high. That's good, it's fine, because the stock market in the US always goes up. Forget about the bumps of recessions and hitting of the market. If you draw the graph, you smoothen it, it is upward all the time. Depends with what percentage. But that's not the point. So, the world has been expansionary during COVID time, then contractionary after COVID because of inflation. Before Iran, the world was expansionary. Expansionary meaning we were lowering interest rates everywhere. The last from before February, across the world, the Federal Reserves or the central banks were lowering interest rates, including ours, including the US, even with the push for more cuts by the executive there. Now, inflation has climbed. The only month we have measured very well after Iran, in Kenya, inflation is up. Inflation figures in Kenya will be coming out this weekend. Of course, you may expect something more than 7.5%. Most likely, definitely. So what does that mean when the next CBR is meeting? When the Federal Reserve meets in the US, the very best to accommodate the executive, the very best they can do is to sustain the rate. But that's not even feasible. The sensible thing is to raise. CBR is to raise. So we are back to contractionary. So we are back to contractionary, meaning interest rates will be going up. Revisit the issue of debt I talked about in your boards. Mimi nawapea two hints because you know at 11 mtaenda kufanya more homework. So we have now started a journey of raising interest rates. So that's contractionary monetary policy. Even if I'm talking about shares, that point lift it, take it back to Ghana, and start now doing it. Actuaries in the house, you go do your homework. With this raising of rates, with the other problem I described, then tell me where we are headed. And then tell me what you foresee in terms of subscriptions of boards and bills in the next few weeks. Then you make your decision. Let me go back to the equities. So PE ratio of the US market. Nimesema naenda hints because this fall is filled by people who should actually be holding the mic and me listening. So you are all well versed. PE ratio in the US market is over 27. If you bought all the US companies. Johannesburg could be maybe over 15, the PE ratio. Nigeria, maybe around 11. By the way, in this hall, do we all know what PE ratio is? Because I think I'm assuming too much. We know, eh? You know, I may start talking Greek, then I'm talking to myself. If you bought this hotel today at 10 million shillings, and the annual revenue is 1 million net revenue, how long would it take you to recover your money? Talk to me, guys. 10 years. That's the P ratio. That's the P ratio. If I bought Absa, Kenya today, and their net revenue, if I bought Absa for 100 billion today, and their annual net revenue is 10 billion, how long would it take me using what is called trading PE, the most recent trading PE, ile iko washatangaza tuseme ni 10. How long will it take me to recover my money that I invested in Absa? That's what is called PE, price of earning ratio, or market cap over net earnings. It will give you the same. If you bought all the companies listed in the US, their PE ratio is 27. It will take you 27 years. There are some that are low, but there are some that are people are buying future. Take Tesla. Tesla is over 200 PE ratio. Most tech companies have higher PE ratios because you are buying the future more than the present. JSC Johannesburg is around 17, maybe 15 to 17. Nigeria around 11. Kenya, the average PE ratio in the Kenyan companies is 5. So I'm starting here as a very patriotic Kenyan, that at the current moment, I don't know why I should not buy shares in Kenya, and I have no reason to buy in any other market, and I have actually no reason to care about what the government is doing, because some of the companies are too solid for any government to do anything. That's why, in this period, since you started hearing me talking about these issues, I don't know any market in the world better than a Kenyan market. None. I don't know any. And I'll give you homework. This is the last thing I'm doing, then I keep quiet. Take your phones, your smartphones. AI will do this for you. Namaliza sasa. Namaliza. Can I get volunteers, 4 of them, just 4, so that this presentation is not mine alone. Just 4. Hata tunamaliza. 4 people with phones to come. Yes, Masharia come. Yes, please come. Tukuje hapa. And ladies, 2 ladies now, 2 bars now. Kujeni. And as they come, my school of thought is this. I said, I have listened to so many things from morning. My school of thought is, Mimi, in terms of investing, I either invest to get rich or I don't invest. So I'm just saying, in the risk profile, don't grade me at the age of my father. My risk profile must be higher. So it's either I am putting in money, I get rich, or wacha nikae nayo. So if you start telling me you have $1 million, I put in somewhere to give me at the end of the year 20%. So I have $1 million, so you give me 1.2 million. So I have 100,000. You are promising me after a year to give me 120,000. So what goes in my mind is this. So I already looked for the $1 million without knowing you. You are helping me make only 20,000. Then I don't need to know you. So my school of thought is that I put in $1 million, I talk about multiples, ama nikae nayo. Is that the investment changes my life or I don't do it? Maybe it's about my age, maybe about my risk profile, maybe about my exposure to many instruments. I don't know the reason. Okay, there is a thin line between getting multiples. There is also the downside. But for me, I would rather handle that than handling at an assurance. Umeinvest $1 million, mtu anakupromise at 200,000. How a person having $1 million, what will 200,000 do to you? It means if you are in a rental house, paying 100,000, somebody is telling you to move, so you know investment and money should, in quotes, make our standards of life higher. So let's take where you live as the standard of life. So you pay 50,000, somebody is telling you to work so hard by investing so that you move from a house of 50,000 to one of 60,000. What is the difference between a house of 50,000 and 60,000? You not even move the estate. Even the flat, your next door neighbor will be paying 60,000. Actually, when you move and return in the same house, you realize they were waiting for you to move so that they increase the rent. So it's not changing your life. So it's either you are moving from a house you are paying 50,000 to one of 150, ama ukae ile iko, ujipange vizuri. That's my investment reasoning. Take your phone. You'll do for me Standard Chartered Bank. Whatever thing I'm going to ask, Standard Chartered Bank. My brother will do for me Equity Bank. My brother will do for me, let me diversify from banking. I'm looking for listed companies. Do for me Car and General. Car and General. Have you ever heard of Car and General? Yes. Very good. There is a talk I had in the UK earlier this year. Then somebody asked, if you had 20 million, where would you invest? Then I mentioned Car and General that time. It was earlier in the year. Then I saw people looking at each other. That time it was 45 shillings in the market. I don't know what it is now, you'll check. You'll do for me, Kenya Power. Now, AI will do for you, so you just Google. Don't even do anything. I want you to check for me, what is the PE ratio of all those companies I mentioned, according to the one you're handling. What is the PE ratio of? Then you look at the company we talked about. We'll be starting here. So that, okay, go to AI itakupea. What is the PE ratio of Standard Chartered Kenya? Remember to put Kenya because Standard Chartered is global. Yes, maybe that's why it's confusing you. This is important. I know you know it's important, the people in this hall. Because it summarizes a lot of things. To me, as an individual investor, PE ratio summarizes a lot of information about the company. And the beauty, it does not communicate to me the hope. It communicates to me the current situation. Can we start? Inakuletea shida? Let's start from here. And you mentioned the company because I'm writing, and you write the P, and you mentioned the P ratio.
It's saying between 2021 to 2025, the ratio is 10%.
It's 10. Actually, it's not percent. P measures periods.
10.
P measures years. I hope you understand, but you got it right. It's close to there, I think.
The Standard Chartered.
Standard Kenya. Yes. Let's go.
So it says the current price to earnings ratio for equity group holdings is approximately 3.8.
I know you think he's wrong, but he's not wrong. It is true. Because you have a company, is now valued in the market at 270 approximately billion, and they are making 75.5 billion in net profits. Without accounting for, using the first quarter, they've already started again reporting increment in profits. So I'm actually using trading P. I'm using trading P. If I use forward P, let's go.
Yeah. Kind general P ratio 2.6.
I also think most of you think he's wrong. He's not. A company valued at 6 billion, and they reported, I think, over 2 billion in net profit. Ati, you are buying a flat, in the case of Equity, you are buying a flat for 27 million shillings. But the net, after umelipa caretaker, the net rent per year is 7.5 million. That's the case of Equity. I'm just removed the zeros. Let me repeat. You are going to take 3.7 years to recover your money using trading PE. Let's go to the last one.
KPLC, Kenya Power, trailing PE is 1.45.
I think you can clap for the lady, even for saying that. Even for saying that. No, good Kenyans. Let's be actual here as Kenyans. Just tell me, you have 10 million. Why would you invest in any other thing other than this? Just tell me. Especially when you are dealing with banks, and this is my last thing. Sorry you gave me the mic to talk about investments, but I assure you this is the last thing I'm saying. Local banks, when you are evaluating banks, also use something called price to book value. You'll get some things there that are just obnoxiously exciting to an investor. So I'm going to redo to you now. Do stand chart. I want to show you a difference between our local banks and international banks operating in Kenya. There is something very clear on how they behave or how our market prices them. And then we can discuss about the reason why. Stand chart. Deal with Stanbic. Stanbic is a South African bank. It is a Standard Bank. Then my brother, deal with Equity Bank or KCB, any that you like of the two. Deal so that because Nation Media Group hosted us and their former dominant shareholder was Aga Khan, let's use DTB because it's their sister company. So all of you now, Google this from the companies that I gave you. All are banks. Because beyond PE, for banks, I also apply this as a tool. Price to book means there is the price of the price, meaning if I'm to buy this bank today, what is the price I would pay? That is the price. Book means what is the actual value of the bank. Actual meaning the core capital of a bank in Kenya is $1 billion. So we have a fresh new bank today. So the core capital is $1 billion. That's the book value. The price value is, yes, it's valued at $1 billion. If somebody offers to buy us, what are they offering? So if they offer anything below the $1 billion, and we accept to sell to them, it means we are selling to them at a discount. If we mean to sell to them at a higher price than $1 billion, it means we are selling to them at a premium. So if we sell to them at $1 billion, it means no premium and no discount. So the price to book will be 1. So the starting point is 1. If the price is equal to book value, then you've bought it as a fair price, no discount, no premium. Hakuna mtu ameumia. Wakuuza ameuza vile ilikuwa. Wakununua vile ilikuwa. So tuko sawa. So let's now check in our own markets now. The same companies that I gave you, check what's the price to book value of the companies I talked about. And they are all banks. We start with Standard Chart because we'll start with these two because they are not Kenyan. Then you see. They are Kenyan, yes, but the parent company is not Kenyan.
For Standard Chartered, the price to book ratio is 2.7.
That's AI. I think the actual one is 2. The very actual. Anyone with a... If you do... Oh! They actually announced a drop in profit. That's why. Maybe. It used to be 2. Who can volunteer what that means? The price to book value standard is 2. What does that mean? Somebody just Lift up your hand where you are. It is 2. What does that mean? Price, what you are buying, over what the actual value is 2. Yes? Please say your name and the company. You must be working for a very good company. Mainga, that must be your employee. How politicians do things. When they hear it was this, I knew. Yes, repeat so that we all hear, because that's the correct answer.
So what it means is that when you pay two times book value, the price you're paying in the market is twice the value of everything. If you were to sell that company, everything out, you're paying twice that value. So you find a high price to book, then you're paying a very high, it's expensive. If it is below 1, it means you're buying a discount. So Stanchart is looking expensive.
Premium. Use the name
It's
premium.
a premium.
Premium of what percent?
200%.
Very good. Excellent.
Stanbic Holdings PLC currently has a price to book ratio of approximately 1.36.
Tell us what you understand with that.
Putting me on the spot. Okay.
Or
Essentially, I take it means that if I was to offer to buy it, I'd pay a premium.
of
Yeah, of around 30%.
36%. We have now all understood that. Now hear these ones now. Check.
I did both with the KCB and equity.
Yes.
They're all at a discount. So KCB, let's say the equity is 0.85, which means the value of equity in terms of assets and what you're buying on the stock price, the assets are more than the price because you're buying at a discount. KCB has
discount of what percent?
15%.
Precisely. These are actually not assets. These are shareholders' funds.
Yeah.
You know, in a bank is an intermediary. Shareholders' funds is the money where if you give your deposits and you pay us your loans and you account for NPLs, what remains on the table. Those are the shareholders' funds. Real money. KCB.
And KCB is 0.65, so it's nearly half. It's near 35% discount.
And remember, AI is using full year, last year financials. Here, our sister company, Diamond Trust Bank.
Wow. Diamond Trust Bank, the price to book ratio is hovering between 0.36 to 0.44.
I know by the look of your eyes you think she's wrong. But it is you who is wrong. She's actually right. Anyone who has volunteered to tell us what that means? A volunteer, tell us what that means. Not the people on the stage. The people, they are all of us. Tell us. You just took lunch.
That means you're paying 40% of the value.
Can you imagine that? So, somebody would argue, why these two? Our market has a gap of information. So what do? We are totally a dividend-driven market. We don't even care anything else. A current investor in the NSC picks the dividend times 10 and gives their age. Their price is usually times 10 to 12. They close the chapter. Oh, wametulipa 10 shillings. That share should be hovering around 120 shillings. That's the reasoning of the current market. That's why these two banks, they declare more dividends. Because it's not their business to expand to DRC. It is Standard Bank of South Africa that should expand to DRC. not Stanbic Kenya. So when Oigara makes profits, he declares almost everything to everyone. Because the most expansion he can do is to open a branch within Kenya, not to go to Uganda. It is the parent company to do that. The same with Stanchart. So in terms of value, then you realize Mwangi there, Mwangi makes 75.5 billion in profits, pays us 22 billion. The rest, he goes to Mozambique to buy a bank, and then passes by Agora to buy another one. So as a shareholder then, I am positioned. I think Mwangi is using my shilling to hunt for me more money. That's why I have more inclination to these two myself. Why? If these two says today, we are done with expansion, if Equity Bank paid the same dividend payout as these two, the share price should be more than double that. Just using what you've googled here in terms of P ratio. Now talk about Diamond. That there are people in Kenya sitting in a room to start a bank. They are starting at 1-to-1. Why bother? Just come and buy a bank at 40% discount. Anyway, thank you very much. I think
Session? Are we in agreement? Yes. Now, Honorable, thank you so much. Let's give him another round of applause. And of course, also appreciate Mr. Russell and a team for accepting to give us different examples. Now, we'll only take 3 questions. Is that okay? Just 3? There's one at the back. Okay. 1, 2, and the lady. So we'll start off with the lady.
Thank you so much, Mheshimiwa, for your time. My name is CPA Winfred Mbicho, and I'm honored to ask my question today. My question actually goes to all the industry players. I believe all of us, or majority of us, have some level of education, but what are we doing to ensure that the common mwananchi is getting that information to ensure that they make great investment decisions? Case example, we have seen companies like Safaricom. Everybody knows Safaricom, including the person who sells the kiosk, like the low-income person, they know Safaricom, but they have never gotten tired of advertising. Anytime I switch on my TV, I'm always seeing an advertisement of Safaricom running across my TV screen. So as the pioneers or as our leaders, what are you doing to make sure that that person has a little bit information of what is a stock, as low as what is a stock, how can I invest in the stock market, how can I buy maybe that bond instead, because I believe most of them fall into gambling because of that lack of that information. The low-income earners will say, this is the only thing that I know. If I put my 100 shilling here, I have a chance of doubling it. Okay, I also have a chance of losing it, but I also have a chance of doubling it. Why can't we have road shows where NSC is going around, even the, what are they called, Vijiji, to ensure every person gets that financial literacy? That's my question for today.
I'm very delighted, Mheshimiwa. I wanted only to ask, because you are an MP, is it possible you can really create a law or a policy so that we can be able to educate our children from CBC now, introducing the issue of shares and investment so that we can be like Americans, where the over 50% are really trained in shares? 2, Mheshimiwa, we are shareholders in KPLC together. I know you don't know me, but anyway, we'll know each other. What is the impact of opening Kenya Power? Because they are saying the EPRA is opening the issue of the power to other sectors to really compete with KPLC. And finally, Mheshimiwa, thank you for good job, which you are doing for this country. I think you are really, maybe you'll be the future leaders. Thank you.
Economics at Maseno University. Ndindi is one of the figures we used to admire. And for that matter, I'll appreciate the work you do and encourage you to walk the talk. Ukibadilika, sisi pia tutakugeuzia mgongo. So on that case, I've seen discussions about debt, and there is this matter called fiscal deficit. The government doesn't speak about it. Reducing our expenditure, we spend more than we get. Kindly, as you expedite the fuel issues, expedite these as well. Let them reduce the expenses. That is the fastest way we can heal in the economy. Back to the matter at hand, that is diversification. To me, there are norms. Somebody might think that diversification is around having many assets, but then it should be having assets that respond differently to economic stress. And that brings me to my question on the microeconomic shift that in East Africa, over the next 5 to 10 years, that you think investors are currently underpricing. Thank you.
Respond to that, kindly take to the floor.
Thank you very much. Madam Bishop, I think, was more of a comment, and I agree with you that CMA, being the anchor around our markets, should be the one actually to do a lot of advertisements. Because our investment companies, and especially investment banks, if you look at those who work there, none could actually be able to marshal the kind of advertisement that is needed to cover the entire country. Because we have many investment banks for a small market. So only CMA, in my opinion, should adequately do that. Wilson, I precisely agree. Some of us were lucky by default. In my first year, I went to a farm that was called Genye Karaoke. But I was going to say hi to my former MP from Keharo as a student in campus, and I was going there so that he gives me something, pesa kidogo. He ended up giving me a job, and I ended up knowing all this. So you see now, this is by default. We should make it by mainstream. That our capital markets, when you are from Siaya, you are from Taita Taveta, you should grow up knowing investing in land is fine, but when you are making use for that land. But there are these more other alternatives. There is no country in the world, none, that grew without having a robust capital markets. Because that is the bridge of capital inflows. So that's one thing that we must do for ourselves to gain, but also do it for our economy to gain. Thank you very much. You are there, and we are all retailers. So we actually don't take part in decision making, because I always get that question. And I can see there are many Kenyans who invest in our local markets and even in that particular company. In my opinion, it's actually a good thing. Kenya generates around, our usage is like 3,000 megawatts. I mean, we should be many times that. And I'm sure we should, and we will. Therefore, it means the field is so big, and efficiency is, how I see it, is like asking Telecom and Safaricom back then. Now that other entries are coming, shouldn't we transform this Telecom to be a kind of Safaricom? That's how I see it. Not in terms of constructive destruction of the company, but in terms of constructive evolution. That when there is competition, there is likely to be efficiencies to be gained. And I think it's good. Always know this. Warren Buffett says it. Utility companies, when you buy them, you must be prepared to buy at a premium. Because the customers for a utility are so sticky that you guys, the lines you have for Safaricom, are the lines you bought when you are in campus. That's how sticky it is. Because nowadays calling is a utility. Now moving from a utility of water and electricity, where are you going to go? The change in infrastructure for a new entry, before our parties do where if, it's complex. And always remember, the infrastructure to carry that product also belongs to where you are as a shareholder. So even if you buy it here, I'm avoiding to be explicit, so that it remains here. So if you buy that product here as this customer, you still use the infrastructure to take it where you want, and you'll pay. I hope I've answered. Sorry, some things we talk in parables, because we don't want to be misquoted. Francis Minette, thank you very much. The biggest existential threat Kenya faces is debt. The sooner we accept that, the sooner we start being head-on dealing with that situation. It cannot continue like this without a proper reset that will give people haircuts and others will chop off heads. Forget about a haircut. Death has the ability to chop off a head, economically speaking. So the sooner we realize this, the more credible we become in looking for the solution. And the other issue of diversification, that was my topic. And I talked about it without using the name diversification. I belong to Berkshire School of Thought. That when you went over lunch, and there is, in the buffet, there are 20 things to eat. There's nyama choma, tubukiza, fry, then chapati, ugali ya brown, na ugali ya white, na ugali ya mhogo, na ugali ya gwashi kama iko. And then, kwa greens, kuna sukuma, kuna spinach, kuna dhoroko, kuna hii ingine. What do? You go to your favorite. You go and pick some ribs of nyama choma. You are done with meat. White meat, you take some chicken. And by default, you take the thigh. I don't know why we always do that when we start in the buffet. Then you go and take spinach and leave the others. You take your favorite. So, you only over-diversify when you are eating, when you don't know how the food tastes. So you go to a foreign country, there is nothing you know there. You go to Ethiopia. It is served, there is no kind of food you know. You only know colors. That one looks green and this one white. So what do? You take a piece of bit of everything so that if one disappoints, you don't come back to the session, to the afternoon session when you are hungry. So you are hedging against your ignorance. If you knew, you don't need to hedge. But because you don't know, you need to cover yourself. So what do? Let me taste a little bit of it. No, don't lie to us. It's because you don't even know how it tastes. Forget about tasting. You don't even know what it is. So when you find you are buying shares in your portfolio, there is one I saw. In your portfolio, you have 25 stocks. Are you an NSE or are you an investor? Then we should make you the NSE. When you find you are buying 25 companies, in the banking sector, you have all banks. In insurance, you have Jubilee and Kenya Re, and then you have Sanlam. Hii ingine ya commercial, you have KQ, you have everything. Only one sector you'll have Kai and General as one, because there's only one in that sector of automotives. You are just telling us, we najaribu tu. So, when you know exactly what you are doing, you do not over-diversify. And because you called me here to talk about my case, my portfolio, I have no more than 5 stocks. And out of this conversation, I know you know which ones. Because why do you, if you parade 10 banks, this is the question Warren Buffett asks. If you have priority, let's say tourism destinations, you want to go for holiday. you grade tourism destination number 1 up to 30. So you have graded your tourism destinations according to your preferences and according to fundamentals. So he asks, you've listed number 1 to 30. What are you doing with number 28? That's the question he asks. Your domain should be around the top 4. Because unless you had a problem in grading. But if you had involved all the tools and you graded, what are you doing with the number 11? So that is the issue of a diversification, both in sectors and actually counters. In terms of investment, what I need to do, both is a no for now. Fixing money, of course, is a no. Anything fixed is a no in this time of how things are. So then when you come to equities, I zero into sectors. Some sectors, we start with agricultural. Always know it is cyclical. Before you buy, just know it is all rain-fed. So if you make profits this year and next year, for sure, the third year expect something different. Now, I come to banking. I realize these guys are making money. But out of these guys, who is thinking ahead of others? Then I go to regions. I look at this profit they made. How much is from Kenya and how much is from the region? Then from there you can see the thinking of the management. Then I jump into where the thinking is corresponding with changing my life other than getting marginal increment in my investments. So I jump in there and I keep quiet and I wait. 2024, this is my last thing. This is company we are talking about that my brother is also a shareholder there. So I will go, because I do my own analysis, that's another thing I want to say. I actually don't believe in a small market of 60 companies, what is the expert's work? The expert's work should just be to facilitate the transaction. If you had the brain to look for 10 million, why do you need somebody to tell you how to do with your 10 million? Yani you had all the time to look for your 10 million. You worked for it for 5 years. It will take you less than 2 days maximum of your spare time, not the full days of your spare time, to know everything you need about our stock market. And then, you are relying on what we did here. Which expert did you use? I'm not talking here about the experts here. I'm talking about investing in stocks. 60 companies listed in a stock market. You can do it with your eyes closed. Because once you have the initial information, the other ones becomes additional information. So I did some analysis that time. So I checked. Hey, then I see Kengen is here. It was then around 4 shillings. I look at the P ratio. I look at profitability. I look at dividend payout. Then I went into the energy. Now I bumped into that company. It was not exciting to me before. Then I looked at the assets. By that time, assets were 250 billion. Now the assets of that company is 401 billion. Market cap that time was 3.5 billion. A company covering the entire Kenya. Then in my mind, depending on how we think as Kenyans, nikaanza kuona hata wakiuza ile nyumba yao ya town na ile ingine ya pale Parklands is already more than the 3.5 billion, the valuation. It means all the wires around here and all of us as customers are not even counted in the value of the business. Okay, that time it was making a loss. Then I saw how possible is this kind of a company like it to make a loss. And what is it making? Why is it making a loss? Then I decided, in any case, the price then was 1.8 shillings. It was 1 shilling 80 cents. Then I decided, a lollipop is more expensive than this share. Tropical is more expensive than this share. So what am I losing? Just a sweet. So even if the worst case scenario, it goes haywire, all of us will be in blackout. Will that be tenable? No. Then I decided I don't even want to consult anyone. Buying. I remember the first time I told the stockbroker, buy this. They told me, what are you saying? Yes, buy that one. You know, Muhesh, it's making, yes, I know. It's making a loss, nini. So I was asking them, do you want me to buy when it's making profits? Then I jumped in and I decided to actually concentrate, not diversify. We are talking about 2024, the price it was. I had bought over like 2 years prior or thereabout. But by 2024, today we are 2026. Today, it was 1550. Having touched 18 before Iran. So it means a million then, 1.8 million then, 1.8 million shillings then in 2024 is 15.5 million today. Asanteni sana.
Honorable, before you leave, we just have one last question from our Chief Commercial Officer.
Asked me to ask you for your bank account number. But that's not what I'm about to ask. Thanks for the very insightful comments. There's a question I've been carrying for quite some time. You recently made news to have invested significantly in Kenya Airways. When you look at the PE ratio of Kenya Airways, it is nil. They've not issued any dividends, and they are making losses. Do you know something that we need to learn?
As I answer that, because you guys are market people, there is nothing I have said here that you could not have found before. All the price to book values, all the P's, all that information was public before you came here. It is still public by the time you are leaving here. Now, there is a reason I'm saying that. There could be a misconception that as somebody is a leader somewhere, maybe you have some information. I have told you about Kenya Power. The initial, wachana na 2024, the initial ones, I actually bought when I was deep in the opposition in the last government. Deep. It was actually making losses. But the reasoning is usually this when I'm buying shares. Before I come to this KQ issue. Me, I don't buy shares. I buy a company. Even if I'm buying one share, huwa najijaza kama nanunua kampuni yote. The demeanor is like I'm buying the entire. So when you are buying 1,000 shares of ABSA, you must have a demeanor of buying the entire ABSA. When you are buying Sanlam, have the demeanor of Patrice Motsepe. He's now the largest shareholder. Like you are buying the entire company. That's where you start grounding yourself on fundamentals. When you buy shares, you ground yourself on analysis of the stock movement. Imekuwa price gani for the last 2 years? So you start now tracking the market when you are buying shares. But when you have a demeanor of buying the company, you start tracking their performance for the last many years. That's what I did to Kenya Power, by the way. So there were some 3 years, 2 years, I think, or so, it made, I think 1 year or two, it made losses. Then I started going historically. I realized these 2 years were outliers. But I also realized one more thing. People have been dampened by this information. This should work for me. You know, the gap between what you know and the investor and what the market knows, let me repeat. You make money in the market through the difference between what you know and what the market knows. Always get the market as an individual person. The market will be superficial most of the time. The market will always be superficial. It will not go so deep. The market, not even the people, the market. They made a loss. from there the market becomes rained on. So you have a hen, jogo. It has been rained on. When it's rained on, it looks like hata iko na homa, kuku. Isn't that the best time to give an offer? Then you take it away from the rain. You don't even take it away from the rain. You definitely know the rain usually stops. So you buy it when it was raining an hour ago. In the afternoon there is sunshine. Ile jogo inaradarada kwa boma. And you bought it for a song. So that the difference in information usually comes when you dig deeper. These issues I'm talking about, P, price to book, history, what are they expanding to? Like the banking. The reasoning of the market, in fact, banking is the best example. The reasoning of our market is dividend. It ends there. So that's why the banks that are paying dividends are highly priced than the ones not paying. But you realize the ones that are not paying are even having annual incremental profits higher than the ones paying. So it means these banks are becoming bigger and the value is being created more. I was just trying to avoid the question of KQ. That's why I engaged in a lot of verbosity. So my reasoning again, should I buy it when it's making profit? That's my reasoning. I don't want to go so deep, but every information about KQ is public. And even what made me buy is also public. In fact, I bought it 2 days after Business Daily put it public, whatever the reason it is.
All right, quick comment from my chief.